Assalamu alaikum students, and welcome back to new session. Nowadays we discuss about money and credit. In the previous session we have seen about three different cases of one village. These three different types of people take loan from various sources. Various sources such as money lenders, traders, suppliers, banks, employer, and one more, cooperative societies. So those various sources of credit actually categorize into two sectors: formal sectors of credit and informal sector of credit. Formal sector of credit. In this sector, mainly loan provided by banks, financial organizations, and cooperative societies. Now about informal sectors of credit. If you take loan from your friend, from your relative, suppose you are in need of money. Sometimes we borrow money in case of emergency or in certain circumstances from our friend, from colleague, from relative, right? There is a kind of loan too, there is a kind of credit. So that credit we count in informal sector. So informal sector, informal lenders include money lenders, traders, suppliers, friends, relatives, right? So those are in informal sector. Let's try to understand with one example. For an example, a person wants to buy two-wheeler for himself, a motorcycle, right? He doesn't have enough money, but he is a salaried person. He gets regular salary every month. So he has three ways. Cash he doesn't have, but wants to buy motorcycle. So how? Some amount of cash he has. So either he can take loan from the banks or financial institutes, those who provide financial services, loans. But from banks and financial organization, he has to pay some amount of interest. He has second option. He can borrow money from friends or family. Right? When we borrow money from friends or family, generally we don't pay them interest. They just help us. That is the second way. The third way, like he also borrow money from the money lenders, right? So if he willing to take a loan from bank or financial organization, so that loan considered from the formal sector. And if remaining two option, any of remaining two options, such as friends, family, or money lenders, so those are from informal sector of credit. So let's try to understand formal sector of credit and informal sector of credit in India. So formal sector of credit under the Reserve Bank of India. Earlier I told you brief information about the RBI, the Reserve Bank of India. The Reserve Bank of India is Central Bank of India, which issues currency notes on behalf of the government of India. Earlier we have seen. More, it is called the bank for the banks and the bank of the banks. Reason, because the Reserve Bank of India supervises the functioning of formal sector. For instance, we have seen that banks maintain minimum balance, minimum cash deposits they have to maintain. Amount of cash deposit guideline given by the RBI, which we have seen earlier. So they have to maintain this. Banks have to maintain that minimum level of their cash deposits for daily transactions. So RBI checks on it. More, the RBI monitors the banks in actually maintaining cash balance or not. RBI also issues minimum level of cash balancing, cash deposits, as well as it monitors whether bank maintains or not. Similarly, the RBI sees that banks give loan not just for profit making purpose, but they also provide loans to the other needy as well. What does it mean? Because generally, purpose of bank, aim of the bank, I am talking about commercial bank, to earn maximum profit as other commercial institutes, right? So RBI checks that, monitors that those banks not only provide loan to the large traders or businessmen, all right, means large firms, but also to the small cultivators, small scale industries, as well as people those who are in need. Like those are small borrowers. Periodically, banks have to submit various reports. How does RBI know about this all? Because banks have to submit periodically reports to the RBI. So in this information, in these reports, like how much they are lending, mainly about loans, how much cash deposits they maintain, how much they lending and to whom, and at what interest rate, what kind of loans they provide. What kind of loans? That means like agriculture loan, two-wheeler loan, right? Education loan, small scale industries loan. So all this information banks have to provide to the Reserve Bank of India, and Reserve Bank of India checks all those information. So this way RBI has control over the formal sector of credit. Now about informal sector of credit, like money lenders, traders, suppliers, friends, family, relatives, right? So actually there is no organization to supervise their work. So they are free, right? No one supervises work, no one above them. Banks cannot make all the decisions by themselves regarding credit because RBI is there. They have to follow the RBI's guideline. They cannot deny it. That is mandate. But here there is no such organization for informal sector of credit. So here credit activities of money lenders and other informal sectors, right? That is limitless. So they can lend at whatever interest rate they choose. For formal sector of credit, that interest rate also given by the RBI. Means limits are given, not fixed interest rate given by them, but limits are given, that is maximum rate. So bank charges up to that, right? Banks can charge up to that, but here there is no limitation. So here like money lenders, they can charge interest rate whatever they want. Right? There is no one to stop them from using unfair means to get their money back. Here in formal sector of credit, when we take loan, we sign certain agreement. Legally we sign, and those agreements contain terms and conditions for money lenders as well as for the borrowers as well as lenders, means for the banks too. So both are in their limits, both are bounded by those terms and conditions. So if anyone fails to repay the loan, the banks cannot use unfair means. We know that many of the businessmen, right? Many of the entrepreneurs like Vijay Mallya, Choksi, and there are lots of here in India. They also misuse of certain provisions, right? They flat away. Now they declare they are not able to pay. They are bankrupt. They say that. So banks are also in the limit. They can go legal and try to get a solution. Here we know that cases are there in courts, in court of London as well as in India too, regarding those money issue of repayment of loan. But I think if you have seen in the movie, I don't remember any name, but generally this kind of scenes I know that in the movies, that when someone borrows money from the money lender or rich landlord, and if fail to repay, then we know, right, what do they use? They use that antisocial people. I'm using the antisocial people, right, like thugs, for collection of their money. Those are unfair means, and those unfair means possible in informal sector of credit. Compared to the formal lenders, most of the informal lenders charge a much higher interest rate on loans. If you remember, we have seen previously, bank charges 7%, 5%, 10%, 20% per annum. And in the previous cases, we have seen that up to 60% charged by the money lenders. In the first case, right, of Shyamal, 60% per year. So, if Shyamal wants to take 1000 rupees for an example for a year, he has to pay 1000 rupee back, that is principal amount, plus 600 rupees interest on it. That is too much for a year. But bank charges nominal interest rate. Generally, not nominal but affordable. More, the cost of borrower of informal loan, that is much higher. Higher cost of borrowing means large part of the earnings of the borrowers is used to repay the loan. In case of Shyamal, has taken loan from the informal sector, he earns fair, good enough, but most part of his earning he has to repay for loan, expand for repay the loan, because first of all principal amount, and then after higher rates of interest, right? So difficult situation for those people who borrow money from informal sector of credit. More, in certain cases, the high interest rate for borrowing can mean that the amount to be repaid is greater than income of the borrower. In case of that Rama, a landless laborer, her income is less, and money interest rate, loans interest rate, that is much higher. So this could lead to increasing debt, and even in certain situation, their interest amount becomes bigger than the principal amount. For an example, continue with the Shyamal example. If 1000 rupee loan taken from the money lender for a year, how much he has to pay? 1600 with 600 rupees interest amount. Alright? Suppose he failed to pay the loan for that year. Continue for the next year. So next year, how much he has to pay? More than 2200 rupees. That is only 1200 rupees interest rate, which is more than the principal amount, right? So here people who might wish to start enterprise, means a business, by borrowing may not do, because higher cost of borrowing. When farmers, when they don't have money, they are afraid to take loan from the informal sector. Capital they need, but they are afraid to take loan from informal sector because that is completely not feasible for them. So here those farmers need cheaper loan, those enterprise entrepreneur, those who want to set up new enterprise, they also need cheaper loan. Traders need cheaper loan, right? So they can utilize cheaper loan for their agriculture purpose, for their businesses. So for these reasons, banks and cooperative societies need to lend more cheaper loan, that means from the formal sector of credit, from banks and cooperatives. This would lead to higher incomes, and many people could then borrow cheaply for a variety of their needs. If cheaper and affordable loan available from the banks as well as from the cooperatives, so more and more people would utilize the credit from the formal sector. For example, farmers would take loan for the cultivation of crops, for their to meet their needs of capital, right? As a result, more productivity per hectare of land, more income of farmer, more productivity from the agriculture. So benefit for the farmer, benefit for the Indian economy. Similar, an entrepreneur, a new businessman wants to set up his business but doesn't have money. But if cheaper loan available at affordable conditions, so that person would take loan from the banks or cooperatives, he might start a new business. New business would give him more earning as well as helpful for the economy as well. Similar third condition, small scale industries which are crucial for the Indian economy, vital for the Indian economy. And those industries, we know that previously we have seen that those industries actually face credit issues. So if those industries get affordable credit from the banks, from the cooperative societies, from the financial organizations, right? If those industries benefit those industries would give to many people, like the owners of the industries, workers of the industries, as well as indirectly to the Indian economy as well. Thus, we can say that cheap and affordable credit is crucial for the country's development, because if agriculture sector develop, if small scale industries develop, if those new enterprises, new firms, new business will set up, of course, that ultimately the economy of the country will develop. So, we can say that cheap and affordable credit is crucial for the country's development. So, here is about informal sector of credit and formal sector of credit. I hope you can make differences between the formal sector of credit and informal sector of credit. Like basic points. Formal sector of credit, banks, financial organizations, and cooperative societies we include. In informal sector of credit, money lenders, traders, landlords, friends, relatives, etc. are included. Alright? Second point here, RBI supervises credit activities of formal sectors. Here, there is no such organization to supervise credit activities of informal sector. Third one, here RBI actually not only supervises but it provides guidelines too. It monitors and provides guidelines that regarding interest rates, whom to give loan, right, at what level of interest rate, etc. Here, in formal sectors of credit, there is no such organization. So those people like money lenders, they choose interest rate as much as they want. In formal sector of credit, there are legal agreement upon both borrower and lenders agree. Here in informal sector of credit, there is no such kind of agreement. No written agreement, no legal agreement in most of the cases. Next point here, in formal sectors of credit, there is no provision of unfair means of collection of loan, repayment of loan. In informal sector of credit, they use unfair means to get their money back. In formal sector of credit, various documents are required. In informal sectors of credit, generally documents are not much required because they know who borrow the land. Like if you borrow money from the local money lenders probably knows you. For an example, in the case of Shyamal, he borrows money from the money lenders. He borrows money from the trader. So trader and money lenders know him. So they don't ask him documents. Documents are not necessary. Next here, collateral is required. If you want to take loan from the banks, from formal sector of credit, collateral is required. We have seen about collateral. So what is collateral? What is collateral? This is not classroom, so you are not unable to answer here. So if you know, that is a good thing. If you don't know, kindly watch the previous videos. Alright? So collateral is required for formal sector of credit, and informal sector of credit, collateral is not necessary. Not always necessary. So those are the main differences between formal sector of credit and informal sector of credit. More we will see in the next video about some more information regarding formal sector of credit and informal sector of credit, and self-help groups for the poor. We will discuss in the next video. Thank you so much for watching video. See you in the next video.